I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mish Shedlock, editor of Mish's Global Economic Trend Analysis on maven.net/MishTalk. Welcome back to the show, Mike.
Pleasure to be on. Lots going on here in the U.S. and Canada. What's on your mind?
Well, of course, the tariffs, Canada's retaliatory tariffs happen on Canada Day, July 1st. Is it a mistake for Canada to even try to retaliate against tariffs?
It is. The correct policy, no matter what anyone does, is to just simply remove all tariffs and be done with it. And you know what? If Canada did that, it would be far better off. Trump has a legitimate beef with Canada over dairy. Perhaps you can explain why, Canada does this, but essentially my take is that it's the same thing that happens in the U.S. Canadian dairy farmers don't want imports of, let's say, cheese from Wisconsin or dairy products from wherever, and so we have tariffs. So Trump is excited by that, upset over that, even though on a international basis it's kind of trivial. But, he's responding with steel, and my understanding here is the Canadian car manufacturers are absolutely getting clobbered over it here now. It's not pretty. U.S. manufacturers of nails, whiskey, lobster, corn, wheat, chickens are all getting hurt here now. The thing is, these tariffs backfire inevitably on whoever puts them on. The smart thing for Canada to do would be to not retaliate and actually remove tariffs.
Well, China has specifically targeted certain states that voted for Trump, so if it's Kentucky whiskey or Tennessee bourbon, they're going after them individually.
Wisconsin Harleys, the Harley Davidson announced yesterday, and Trump really got into it with the Harley CEO. He's going to open up a plant in the EU to avoid the EU tariffs of 25%. So here we have a direct loss of U.S. jobs that are going to go to the EU instead. Trump accuses Harley of wanting to do this anyway. Probably true, but no question, Trump accelerated it with his move. You have a U.S. nail manufacturer that is about ready to go out of business because his prices are going to go up. We have three manufacturers in the U.S. who make the steel wire fabric that goes into tires. They're set to go out of business. Trump is telling these people, well, just hang on. All for what? U.S. car prices are going to have to go up as a response to higher steel prices. It's madness across the board to voluntarily hike prices in an attempt to save a few jobs. Doesn't work.
Well, didn't all the U.S. factories leave in the first place just because it was cheaper to build stuff elsewhere?
They did, essentially. So what? If they are supplying, if it's good for the U.S. consumer, it's good for the economy, period. That is an undebatable truth. Standards of living rise when more goods are available at cheaper prices, period.
Well, up till now, the take was it makes economic sense to build and create things where it's most economic. So if that certain country is good at making running shoes, they should make the running shoes. If somebody else is good at making snowmobiles, and then they should make the snowmobiles.
Now, the interesting thing here, Jim, is manufacturing has been or had been returning to the U.S. Why? Because of automation. It takes fewer and fewer people to build a car, to actually do anything. The manufacturing in the output in the U.S. has skyrocketed over the last 20 years. It's despite jobs going elsewhere or allegedly going elsewhere because of the fact that productivity here in the U.S. is higher than anywhere else in the world. That's why we lost these jobs. China is losing jobs now to Vietnam, elsewhere, any place else that can, produce the jobs, cheaper. But manufacturing jobs globally are on the decline simply because of productivity. We're not going to bring those jobs back, even if manufacturing returns to the U.S.
We'll have more with Mish Shedlock right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Mish Shedlock. Mish, it's not just manufacturing jobs that face being replaced by automation or robots, is it?
No, it's not. I don't know if you saw the article or if you're just simply reading my mind, because that's what I was thinking about during this break. HSBC, one of the major bank, is unveiling banking robots. Now, these are actual robots as opposed to software robots. These things look extremely humanoid and talk, and customers can interact with them via a tablet to set up new accounts. Now, I don't think this is going to cost very many jobs, but this is where things are headed, and it's going to be headed the same way in fast food restaurants. Companies have a monstrous incentive to get around this inane push for $15 an hour for uneducated, unskilled people who just stand there and take orders. So it's happening elsewhere, and the union's policy to fight it gives corporations an increased incentive to do more of it.
The U.S. has asked its allies to stop buying oil from Iran. Does it have any allies left?
Well, now that's a good question. Allies? Do we have them? Certainly we don't treat anybody like allies. Canada is a tremendous, or should be a tremendous ally. One would never know it if, judging from the back and forth tit-for-tat comments between Trump and Trudeau. The Germany, one certainly would not know that Germany is an ally. The UK, it's interesting. Trump is going to the UK next month. It'll be interesting to see what happens with that one. Trump is getting along with Kim Jong-un quite nicely here, North Korea, but he's not an ally. So where is this headed? He's asking Russia, who's also not an ally, to step up production of oil to counteract the forced, not asked. See, you said asked. This is a forced demand that says, don't trade with Iran or we will put sanctions on you. India said that it was not going to honor the sanctions. I actually believed that a few days ago. I'm not sure I believe that today. I'm looking at some of the latest research that says what Trump is going to do if these companies do not honor it. Does India want to be sanctioned by the U.S.? I don't know. This is what it's come down to, Jim, and it's a really, really sad state of affairs, is Trump can set sanction policy for the entire world. Unless some country or countries agree to stand up in union and tell Trump to go to hell, and that's what ought to happen, but it doesn't look like it will. If the EU, if India, if China and Russia all got together and said, fuck you, Mr. Trump, these sanctions would end tomorrow, but they won't.
We'll have more with Mike Shedlock right after this.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Shedlock. Mish, should we still be worried about the economic states of Greece and Italy?
The Italy, yes. Greece is pretty much irrelevant at this point. Italy has placed demands on Germany that cannot be met. There's another migration crisis in Italy right now. Italy turned away with consternation from, about half of the rest of the EU. But the thing is, Italy has on its side Austria, Hungary, and a handful of other states that think it's time to redo the Dublin Treaty, and that essentially says that the country where a migrant first lands is the country they must apply for asylum for. This puts pressure on guess who? On Greece and Italy, because Italy over the Mediterranean Sea, it sticks out, and Greece through Turkey. So, there we have it. I don't think the crisis is solvable because there are three positions that are contradictory that can't be met. You can perhaps finagle an agreement between two of these positions, but not all three. Italy wants to redo the Dublin Treaty, the Dublin Pact. Germany wants to redistribute, Bavaria wants to send back all of migrants to the countries where they came from. Already we've got a problem here. Merkel wants to come up with some EU-wide solution which everyone agrees to take their part. Meanwhile, there are a handful of countries, Hungary, Austria, two more. Poland is a third one. There's a fourth one that say they don't want any migrants at all. So you cannot untangle this mess. And the head of the CSU and the state of Bavaria have it as their right under German law to refuse to accept migrants and turn them back at the border. They've threatened to do that. Guess what? They're going to go to Austria, which doesn't want them, and Italy refuses to take them back. They would have to get to Italy through Austria. So you can see this doesn't work. Now, even though Bavaria has this right to do this, Merkel has the right to fire anyone who does actually execute that policy. So that's what it boils down to. If Merkel gets rid of her CSU partner that makes up the current coalition, Merkel no longer has a majority. So the coalition crumbles, and I believe we would see new elections and probably the end of Merkel. That's what's going on here. We have, I think, something like a week for Merkel to untangle this situation. The head of the CSU gave Merkel 14 days in which to straighten this out. And that was about a week ago, so they've got about a week left. There's another meeting tomorrow on Thursday. If they don't hash it out there, I don't believe they will.
What do you say to people who say we shouldn't mix politics and economics together? Is that...
I'm accused of that all the time, Jim, and I do that. But it's very hard to separate the two. Here's the politics. We're talking about politics of turning away migrants. The whole Schengen Treaty in Europe is under attack here. Now, that's a political thing, but the economic impacts of that are absolutely enormous. The economic impacts of Brexit, which still may go down as a hard Brexit just because of infighting between the UK and EU, is also likely to be very enormous. So I have a section on my blog that's devoted to politics. I seldom use it unless it is just extremely political without economic implications. Not normally the case, Jim.
Cryptocurrencies, what's going on there, and are people still liable to lose lots of money?
I think so. I mean, that's just my position. That's my belief. Good grief. I certainly wish I would have bought in at 1 penny. I would have tens of millions of dollars if I did, assuming I could have bought in any size then without influencing the price. I don't think that was possible. But probably one could have started accumulating positions slowly, under $1 up to a few dollars, and then a little bit more aggressively up to $100 or even $300. It was possible to accumulate enough money, had I done it, for me to be a billionaire right now, or for you to be a billionaire right now. Now, the thing is, I mean, what's the correct policy to do now? The people bought in at close to $20,000. It's now down to $6,000. What is that? They're down 2/3 of their money, roughly. The one could have bought at 1,000, and they would have been up 20 times, and now they're up 6 times. What's the correct move? I didn't like it at 3,000, so if it falls to 3,000, I'm still not going to like it. If it falls to 1,000, I might rethink and take out a position, but it won't be because I like it. It'll just be a risk that perhaps I would be willing to take. So I don't think that Bitcoin is viable long term. Some of the other cryptos may or may not be, but ultimately, if any of the cryptos gets big enough, central banks will squash them. That is the card that they can play, and we've seen it here with sanctions to prove it. So I think people are fooling themselves if they actually believe that Bitcoin or some other non-government sponsored crypto is suddenly going to rule the world. It's not going to happen. It will be crushed.
Is Tesla going to be able to pull out of its nosedive when it comes to its car business?
I don't know. The economics would dictate that that's impossible. But if we look for years, I mean, Amazon lost money for years and years and years, but it kept, and here it is today. You know, one of the most valuable companies in the whole world, if not the most valuable. I forget the order here now.
Well, so they say it could be the first company to be worth over $1 trillion.
Yeah, that's what we're looking at here. So it's possible. I wouldn't have any part of this or any of the other high-tech flyers here right now. I don't see any value in them. There was value a few years back. Is there value now? I don't know. I don't think so. There's also a difference between Tesla surviving and surviving at what price. GM went bankrupt, but it survived, and its share price is now recovered, so it's back. I don't know. I haven't looked lately at GM, but let's just say back to where it was, you know, a year before it went bankrupt. Is that a good investment? No, it's not. And I would view Tesla the same way. Even if it survives, it's unlikely to be a good investment from here.
Mish, thank you so much for being on the show.
Pleasure to be on, Jim.
My guest has been Mike Mish Shedlock, editor of Mish's Global Economic Trend Analysis on maven.net/MishTalk. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.